Hey traders, thanks for stopping by. Taylor Carver here from TheTradingAnalyst.com. Hope you guys had a great weekend. So I want to prepare you guys for this week ahead. So let's get into it right now. So this is the market, the S&P 500 going back a year of action. I cover kind of my longer term picture in a video I did last week. And if you want a kind of a bigger picture, beyond just kind of the more recent action that I'm going to cover in this video, then go ahead and watch that other video, or you can watch both videos. It doesn't really matter. So I do want to make another announcement. We are doing a free 14-day trial now at TheTradingAnalyst.com. We've never done this before, so if you're at all interested in becoming a member, you need to do it right now while we have this special offer going on, and I'll talk more about that at the end of the video, so you're definitely going to want to stick around. Alright, so what I'm seeing here in the market is something that we saw just recently, well, kind of recently, back in late February and March, and I'm going to go over exactly what I'm talking about right now. So the action that I'm talking about, that I'm going to kind of be comparing, is this action over here that we're seeing currently over the last month and a half or so, and compare it to this action over here that happened in February and March, okay, right here. So let's take it step by step. So we had this big drop over here, big drop. All right, let's look over here to the more recent action, big drop, okay. Then what happened? We saw a nice move up right here. Saw a nice move up, and you can see it kind of traded sideways a little bit before getting that nicer breakout. Same thing over here. Move up, kind of traded sideways, got a nice move up, and then what did it do? It kind of failed and made a new low, broke that low back under the 20-day moving average right there. What do you know? Same thing happened over here. Broke down lower, failed, didn't hold the breakout, broke back below the 20-day moving average. Okay? What did it do next? Well, closed green the next day. We had a gap, small gap lower on this day with a lower low, followed by the next day a green close, and this is on Friday of last week, green close over the previous day's high. And if you look over here, same thing happened. Green close over the previous day's high, and we reclaim that 20-day moving average. So if you're looking, so far, it's literally identical to what happened over here. Okay, does that mean that it's from now it's going to be the exact same thing that's going to be happening next? No, but it's a very high likelihood. Okay, you got to look for patterns and things that have happened in the past. Okay, because the market tends to repeat itself. Okay, it kind of behaves in similar ways. So that's what I'm preparing for. Okay, so what happened next? Because right here, this action right here, all right, it's the same as this action right here. All this has been the same, okay? But here we are at this point. And what happened next? We got a nice quick up move for the next week or so. And then what happened after that? It failed and headed lower right there, okay? So that's what I'm expecting, because this is the market likes to kind of screw over the most people, okay? Especially on bottoms. And it's not that the market has some kind of feelings or goals to screw over people, but that's just kind of how it works, okay? It doesn't make it easy for people. So a lot of people, they think, oh, this is the rally, oh, you know, we're heading back up to new all-time highs. Oh, no, we're not. We're headed back all the way to the lows. And then it kind of just fools people, chops people around, and that's what you got to kind of be looking for. You got to be looking for the non-obvious moves, okay? So next week, I'm anticipating a rally, okay? And I'm anticipating that rally to happen, let's see, the target, I'm going to be targeting this gap fill up here, and that's right around, if you're looking at the S&P 500, it's right where the 50-day moving average is as well. It's right around, 2,800. Let's just call it 2,800 on the S&P, the SPX, to give it a nice round number. So I just realized I haven't been wearing my microphone, so hopefully you guys have been able to hear me this whole time. But now I'm wearing my mic, so hopefully it's a little easier to hear me. So, yeah, so heading up back up to these previous levels. The other thing we have up here is it's also the Fibonacci retracement level. If you draw from these highs here to this low right here, 61.8 Fibonacci retracement level right there, matching up with the, so we've got the Fibonacci retracement level lining up with the 50-day moving average, lining up also with that resistance from these previous two highs right there. So we've got three things lining up right in the same area, okay? I do believe that most likely once we head up to that level, we'll get rejected. If we don't get rejected there, I believe that we'll get rejected at this level right here. There's a gap to fill right here at about 28.80. It was also the previous all-time highs that we saw right there. So that's kind of what I'm looking at. Again, you know, the main thing is, you know, you got to look for patterns, okay? This is literally identical so far to what happened back in February. And bottoms and tops tend to form in very similar ways as they have in the past, okay? So again, for longer term analysis, watch that other video I did. This is more of the shorter term action, and I'm going to kind of update it as this progresses. Once we head back up to this level, I'm going to see kind of, okay, how do we react? Do we have any topping tails? Any kind of a reaction? Because you don't want to just kind of like short blindly. We're going to kind of see how it reacts. But right now, I think this week is going to head up. We're definitely seeing some signs other than just looking at the market as a whole as the S&P 500, but looking at a lot of individual names. I look at hundreds of charts every single day, and I am seeing on an individual basis that we can get a bounce. All right. So now I'd like to tell you a little bit about the free 14-day trial that we have going on right now. You know, if you've bought and sold trades at the wrong time, you've lost money, especially in a market that we're experiencing right now. It's a bit choppy. While other services are losing their clients money, we are not. Okay, we are not. And the other thing that separates us from other services is when you sign up, you are getting complete transparency. Okay, I'm going to kind of show you the back end of the membership portal here. This is what it looks like. When you sign in to your members area, you're going to get first and foremost that transparency. Down here is the real-time portfolio tracker. Every single trade is uploaded to here. You can see since July is when we started this portfolio tracker, we're up $31,000 in the green right there. And you're going to see complete transparency. Unlike you're getting at any other service, we upload every single trade that we make to that portfolio tracker. And you're going to be able to see, you know, is the account growing? And the answer to that is yes. And you're going to be able to watch your account grow next to ours. And we've got all these tools that you can use as a trader. You know, we're not just an alert service. That is a huge part of the service, and that's why the portfolio tracker is there, so you can see what profitable trading looks like. But you're going to be able to see everything else that we have in the service. We do a weekend report where we're covering everything from trade ideas for the week ahead to the general market conditions to kind of give you a barometer. So it's not just the trade ideas and the trade alerts, but we're giving you the tools for you to have success on your own in the market by showing you our professional analysis. All right, and we have the member videos right here, which include trade ideas, trade updates, educational material, and so much more. So I really encourage you to check it out. You know, we're different from every service out there. We are the #1 options trading service on the planet, and we're willing to prove it to you. Okay, we're willing to prove it to you by giving you 14 days to check out the service for free and see if it's a right fit. You know, a lot of services out there are not willing to give away their service for free because they're not confident that when you sign up and check it out that you're not going to like it. So they want to collect money up front, but we don't do that. We're willing to have you check it out take it out for a spin, see if it's a right fit, and if it's not, that's okay. You can be on your merry way, and no hard feelings. But I really am confident that you're going to like it. You're going to get winning trade alerts. You're going to get trade ideas. You're going to get watch lists. You're going to get the weekend report. You're going to get the private Twitter feed. You're going to get the educational material, and so much more. Okay, I take this very seriously, and your success and your happiness as a member is my top priority. So I look forward to seeing you in there, and I hope you make the decision to become a better trader. I'll see you in there.